Good afternoon, everyone. I'm David Edwards. I'm the CEO and founder of a company called ChainThat. And what we've been working with insurance business leaders who have issues, extracting business value from technology by creating real-world applications using blockchain, DLT, and smart contracts that can actually start to deliver on the promise of innovation so that global insurance markets are empowered to move forward. So I think it's probably safe to assume that everyone has at least heard of blockchain and smart contracts in the audience, otherwise you wouldn't be here. But just to set the scene for the rest of this today, I'll give a very high-level overview of what blockchain, DLT and smart contracts are when we think of insurance. If we look at what we're trying to achieve with, to make business transaction go more smoothly, more streamlined between trading parties, there's a few key points that we need to happen. So firstly, we need to make sure that we're always looking at the same data as people we are transacting with. But that be contracting, the wording, premium information, claim information, payment data. So this is where the distributed ledger fits into insurance. Now, when we say blockchain these days, pretty much you can use blockchain and distributed ledger interchangeably. Blockchain is just a special type of distributed ledger. Now, what this distributed ledger does is ensures what I see, you see. So, and everyone that's on a distributed ledger holds a copy of their own data. There's no central party involved in a blockchain or distributed ledger solution. So if everyone's got a copy of their own data and we want to guarantee what I see, you see, what if someone tries to change that data? Because then we wouldn't be looking at the same data. And this is where immutability comes into it. So using cryptographic techniques, we can detect straight away if someone has tried to change their copy of the data and we can dismiss it. So we can guarantee what I see, you see. So there's lots of ways to enforce this, and there's lots of different technologies out there within blockchain. One of the key questions I get asked a lot, what if I make a mistake on blockchain? You've just said it's immutable, so I can't change anything. So you can look at it, you can always roll forward. So if you've got a contract, version 1, you've got your policy, and you've made a mistake on it, you can issue version 2 on the blockchain. You've still got that version 1, but you've rolled forward and you've got version 2, and you've got that history of what's happened. So you can change your data on the blockchain, it's just you have the history of what it was before. So you just keep rolling forward. This enables another key point of blockchain technologies is the audit trails. So by default, you have an audit trail of where you can see who did what and when. So now that we've got kind of shared facts between parties, we've got the shared data, the next point is that we need to agree processes between the trading parties. Rules, procedures, that we use to govern the transactions of business. This is where smart contracts come into it. It allows two or more parties to agree a set of rules on how a contract might execute, what data fields need to be completed for a contract to be valid, under what conditions events would trigger actions and updates to a contract. I'm sure you'll hear lots of examples today about how smart contracts can be used in insurance, but simply they're an agreed set of rules that must be met for a contract to be valid. So far none of that sounds too radical, but with blockchain, like you mentioned, we don't have that central system for the solutions when we set up transactions between trading parties. And people have the misconception that data is broadcast everywhere to every member. Different types of blockchain technologies have evolved. We have enterprise blockchain solutions now where only the people involved in a contract actually have a copy of the data. Now, when we start to bring people onto these blockchain networks, it starts to develop a new kind of ecosystem, and we can start to create ecosystem applications. So if you imagine it like everyone has an iPad is your blockchain. Now, an iPad's no use on its own without any applications. So what we're seeing is the insurance applications that are built on blockchain are like apps on an iPad, where your iPad is holding all of your own personal data. So if I want to trade with someone, I just have to make sure they're running the same application as me and I'm connected on the same blockchain. So how will blockchain shape the future? Next slide. Mm-hmm. So if we go back to what's questions on why, what's in it for me? There's two key impacts blockchain-based solutions can have. First is removing the frictional costs that we're experiencing today in insurance. And secondly, once you've removed the frictional costs, we can actually begin to move to a more real-time updates of data between parties across an ecosystem, leading to new ways of operating and developing new business models based on this. So if we look at frictional costs, the immediate and tangible benefits for insurance are actually looking at the expense ratios. So expense ratios vary from company to company, but today's coordinating and reconciliation approaches increase the number of staff required in insurance and increase the actual cost to us. All the times the margins are eroding and the expense ratios don't seem to be going down. Any manual processes that we have today inevitably lead to human errors, which we're still trying to compensate for by using multiple sets of eyes, which adds further delays and costs. Even agreeing premiums due can actually be a challenge between parties. And once we actually sort out the technical accounting between various trading parties, it tends to be thrown over the wall to the Treasury Department where the real payments are made. And when we want to tally back the payments back to our operations side, there's mismatches, and this is due to the bank fees, netting transactions that have happened, and exchange rates. So we get a mismatch of our data. So where do you actually want to start with blockchain? What can we do today? If we look at the value chain of insurance, from managing new quote requests, negotiating, agreeing terms, confirming cover, signing down, generating invoices, agreeing invoices, making payments, reconciling invoices back to contracts, managing cash flow, credit control, just to name a few, these are the typical back office processes that blockchain can assist with. Blockchain, in effect, is an enablement platform for the coordination between parties, providing data certainty and business processes. If we're looking at facultative or treaty reinsurance, then the retrocessions and the sidecars and the insurance-linked securities, the coordination process gets more complicated, and data and rules need to be linked to generate more efficiencies. By addressing the expense ratio and the frictional costs, we start to build a low-friction ecosystem of interconnected applications using smart contracts and distributed ledgers. As we can start to see the potential where we might commoditize more products, for example, in the SME space, where typically we need a high degree of human interpretation and interaction. By simplifying and defining products with tighter rules and boundaries, allowing for simpler reinsurance placement and management of exposure. But what does this all mean for the future of insurance markets like Bermuda? As we can see, the more adoption of blockchain and smart contract solution business models can become more streamlined. So if we look at regulation, by default, blockchain technologies provide the audit history and the sharing of data. When it comes to regulation and reporting, new models can start to emerge, where we have regulators and grant them real-time access to data based on permissions from the parties. Remember, you still own your data. So this can allow regulators to monitor in real time, for example, the solvency of companies. They can use predictive analytics and AI to start to flag potential issues that are coming up in the future for these companies. They can provide services like tax calculations on smart contracts. And if the regulator wants to apply new rules to smart contracts, this can be enforced in near real time. We're seeing more and more exploration into capital markets for insurance-linked securities. The key issue here is they are more complex to administer, update and maintain than working with traditional reinsurance models. And in effect, anything based on new data, smart contracts can be linked to the original insurance policies supporting ILS from the very start of the chain all the way down to the end where it meets the capital. The cumbersome issue of maintaining the required documentation can be automated where practical. We can also see the capital to markets defining how it would like the security to be structured, creating a marketplace where brokers can go to find suitable pools of capital which their exposure and indicative loss numbers fit. Now, one area I think that's on a lot of people's mind when we talk about blockchain is cryptocurrencies. Now, there's been lots going on recently over the past 18 months to do with ICOs and tokens, and there's been lots in the news about the regulators and how they're approaching this. But banks are now actively investigating and prototyping actual issuing fiat currency onto the blockchain, IOUs representing real money that isn't volatile like many of the tokens today. By linking in the insurance premiums and claim amounts on the ledger with payments, this can lead to real-time settlement linked directly back to an insurance contract, removing even further frictional costs that we experience today. For actual cryptocurrencies like Bitcoin, only time will probably tell when it actually becomes properly used in the public environment, it's still quite hard to use Bitcoin to the average member of the public. If regulators and environments like Bermuda can manage to overcome this and it all becomes a lot more straightforward, then we can potentially see public networks supporting insurance. But personally, I don't see crypto becoming mainstream to the public in the next year, but perhaps in the next 2 to 3 years, new models will start to appear. So peer-to-peer marketplaces enabled by blockchain and smart contracts can start to offer new models of how reinsurance business is sourced, placed and managed. By using an ecosystem marketplace, cedents can select which reinsurers they'd like to participate. Cedents can also publish requirements and allow reinsurance to bid on participation. Members can create profiles that they can match to cedents and reinsurance based on their business lines and available capacity. As the marketplace grows, different types of capital can be added to help distribute the risk across these different markets. Much of this will depend on how the role of the cedent brokers and reinsurers changes over the coming years. But if we take an example of a digital contract, where instead of a certain share, you can actually name your minimum and maximum percentages. This will start to allow for the trading of insurance lines between those ecosystem members on a day-to-day basis with automated adjustments of premiums. There's lots in the press today about parametric insurance. So parametric insurance-based smart contracts will allow external sources to trigger events on insurance contracts. An example of this could be crop insurance in a low-income region, where farmers rely on the weather to be successful. When certain criteria have been met by a trusted source, for example, the low rainfall in August and September, the contract can automatically pay out all the farmers so they can continue to support their family. And this can also be extended down the chain for the reinsurance aspect of the primary insurance. Linking insurance and reinsurance to real-time data will allow more flexible products to be created based on the insured actual needs as opposed to blanket coverage. As a container ship moves from port to port, the risk profile changes constantly. Linking this with sensors and IoT with the changes of location, we can start to see the insurance can be automatically updated, smart policies increasing, decreasing the coverage types, increasing and decreasing the premium. There are already many companies looking into this type of insurance markets, and I think we're going to find the coverage of digital contracts will be able to adapt to these changes and demands. So blockchain and smart contracts are set to help the insurance and help them move forward. With an innovative approach like the Bermuda market has taken in the past, the opportunity to defend and grow the market share with other markets, while other markets focus on the legacy systems they need to maintain their status quo to survive. So when I came to, this is my first time in Bermuda. When I told my nephew that I was coming to Bermuda, he was only 5 years old, he was wondering, he was asking, what are you going to do there? So I thought I explained blockchain and DLT to him. So hopefully you've all now got a better understanding, but as far as my nephew is concerned, while in Bermuda, this is what I'll be doing. Cool. Hopefully you've got a bit better understanding than that, but thank you very much.